All right, welcome back to the stream. Welcome back to another video. In this next topic, we're going to talk about the $7,500 federal tax credit on the Tesla EVs and what this one person is starting to give us guidelines about when it could potentially change and for different vehicles as well. So we'll take a look at it, take a look at that prediction, and we'll see what, if I agree. And we'll also talk about like how, really quickly on how the $7,500 federal tax credit works and how unfortunately this one or credible source for the federal tax credit, I think is 100% wrong, but we will talk about it. If you're just joining in, my name is Dennis. I love talking about Tesla hacking, as I like to call it, but basically just getting the best deal on any Tesla at the best possible price, or just getting really good financing on your Tesla. So if you're interested in any of that, please hit that subscribe. And today's video is actually sponsored by my Patreon link down below in the description if you want to support the channel, but more on that later. All right, so let us take a look at this. Shout out to Troy Teslike. He posted this, or they posted this. I'm assuming it's a he, right, Troy? Battery requirements for the $7,500 federal tax credit will be clarified by the IRS by the end of the month. So, of course, key word here, by the end of the month. When I first read that, I thought, oh, it's going to be at the end of this month. But he's saying, or they're saying, by the end of the month, which really still could be at any moment it could potentially change. So I've got this handy dandy article here, or this fact sheet from the IRS that actually goes into a lot of different details about the federal tax rate. So definitely check it out if you are interested in figuring this out. But the one thing it does go into that is that in any moment the IRS and the Treasury could release more clarification on how the federal tax rate is broken up, the 3750 and the 3750, based upon like critical battery minerals and manufacturing. It's essentially parsed out like that. And once they announce their details on this, the next day it could go into effect unless they release further guidelines. And so what Troy Teslike is actually predicting here is that the tax credit for the Model 3 standard range is expected to drop to zero because, of course, the LFP battery from China, minerals and all that stuff, and also the vehicle is probably produced in China. And after that, there's a 30 to 60 day transitionary period. And that could help sell a lot of their Model 3 rear-wheel drives that are sitting right now. They've got like 300 plus on the website. But the one thing I've never heard before is about this 30 to 60 day transitionary period. So if that goes into effect, that could help Tesla a lot, especially with the Model 3 standard range. And then Tesla could maybe drop the price on it after that. And so he goes into reasons on why the Model 3 does not qualify for the full 7,500 tax credit. The car is not built in North America, and the critical battery minerals are not, sourced from America. But the question is, like, what about the Model Y, the Model Y long range? And taking a look here, it doesn't really look like he goes into much about that. But I think I've heard him say that he does predict the Model Y long range will get the full $7,500 federal tax credit. But at this point, we really have no idea. But if you're wondering, like, how does the, here we go. Do you expect the Model 3 long range to come back instead? Should qualify for the full 7,500, same as the Model Y. They don't have the 2170 cells needed for that because a lot of 27s to go to Giga, Texas. So then, as we predicted before, the Model Y standard range coming from Giga, Texas might actually get the full $7,500 tax credit. But here's the story. So I actually, if you don't know how the $7,500 federal tax credit works, it's a reduction. It's a non-refundable reduction of your tax liability. You probably heard that term a lot. And so I got this comment earlier today. You can see it's right here from D. I read every single comment. So if you comment on the videos, I read through them all. I try and respond to all of them as well. Hey, Dennis, I spoke to an IRS through the Help Center 38. $7,500 credit only works if I owe money after filing taxes. If I don't owe or receive tax refund from the IRS, this $7,500 tax credit won't work. Your videos mentioned that we get the tax credit from the federal taxes paid during the year using a calculator. So I wanted to address this live on stream because I wanted to clarify it, and I found the right terminology to finally actually clarify it. And what sucks about this is because I believe that, the IRS, there's no way they would be giving this information. So I also called the IRS hotline to see, and of course, it's just a call center person over there that you can talk to. that, probably works from home and whatever. I don't want to pass any sort of judgment from that, and essentially kind of reading off of a script. And so the person talked about it and said that, read non-refundable tax credit off of your tax liability. And then I asked her even further, like, if you don't get a refund, or if you get a refund, does it add on top of it? And she basically said no, it is non-refundable. And unfortunately, it's kind of like how their perception of what the words they're reading is maybe jumbling on that. And so I went to go find what are the definitions of certain things. And so right here, what is tax liability? The total tax liability is a combined amount of taxes you owe to the IRS from income tax, capital gains tax, self-employment tax, any penalties or interest. This includes any past taxes you haven't paid from previous years. So that explains tax liability, right? So if you make W-2 income, you're going to have a tax liability. The second definition is non-refundable tax credit. A non-refundable tax credit reduction on the amount of income taxes that a taxpayer owes, but it can reduce the amount of owed to zero, but nothing further. And then the last thing I wanted to address is like the definition of a refundable tax rate, which is the opposite of a non-refundable one. So a refundable tax rate can be used to generate a federal tax larger than the amount of the tax paid through the year. In other words, a refundable tax rate creates the possibility of a negative federal tax liability. I know a lot of this is still probably pretty confusing to you all, but essentially at the end of the day is, if you make W-2 income, and I was plugging this in for a friend earlier today, $190,000, you can see right here there is a federal tax liability of $36,888. Most people usually pay most of that through your W-2 paychecks. There's a line item for your federal tax credit, and so you would get $7,500 of that back no matter what. And I wanted to further fact check this even more. I pulled up the TurboTax software, which you can do yourself, and I inputted I bought a brand new electric vehicle this year, and my tax refund jumped up $7,500 to the penny. So if you don't believe me, I would say consult a CPA. Unfortunately, the IRS is not the best source for this. And the funny thing with this is, like, she even said, like, if you want further clarification, please talk to like someone who can pull up your own tax situation. And I was like, I don't want to get into any of this. But at the end of the day, please talk to a professional. Please talk to a CPA. And take a look at these definitions for yourself, and look at the IRS fact sheet to make your own kind of judgment. But unfortunately, it's interesting because there's a lot of information out there, and a lot of perception, and a lot of maybe misinformation. But hopefully that clears some of it up to you all, and it makes a lot of sense to you. We're going to jump into the live stream comments and to answer all that. But before we do that, this video is actually sponsored by my Patreon link. Down in the description is a Patreon link where you get a lot of benefits. So definitely check it out. And some of those benefits actually include banks, and a list of banks